Hello and welcome everyone to our Illinois State and Local Tax SALT Update. My name is Rachel Von Drasic. I'm a tax partner here at Porty Brown, and I have with me Ashley Traveris, who is a senior manager here at Porty Brown. You will be spending the next 45 minutes with us talking about Illinois state tax updates. I'm going to pass it over to Ashley right now so she can kind of go through our agenda.
Thank you, Rachel. So welcome everyone. We are going to cover a few things today targeted towards Illinois. I do want to point out that this is not going to be a comprehensive this is not full and comprehensive of all of the changes that happened so far in 2025, but we are highlighting some of the changes that are going to be most impactful for our clients. And so those changes we've kind of grouped into these different categories. We've got some income tax changes, some tax credit updates, focusing then on sales tax, talking about the amnesty programs that Illinois is rolling out in 2025 and 2026 here. And then we're also going to end with a brief Nexus overview. And if we have time, we're hoping we will, a Q&A session where we can address some of the questions that come up from all of our attendees during this time together. I do want to point out that we have released multiple articles so far from our news blasts in regards to some of these different items. So feel free to investigate those resources on our website and our news blog if you want maybe a little bit more detail on some of those items. But we're going to do our best here to give you a good high level overview of all of these topics so you're a little bit more well informed than you were when you joined the call. So Rachel, pass it over to you to get things started with income tax.
Okay, perfect. Thanks, Ashley. Okay, so I'm going to talk through some different income tax law changes that happened. So I'm going to talk through three major ones, and I'm going to start with the one that affected pass-through entities first. So you may be wondering kind of what is a pass-through entity? Just to remind you, those are your partnerships and your S corporations where the income gets passed through to those owners and is really taxed on that owner's return. So what was the change with Illinois? So the change with Illinois is that when you're a seller of a pass-through entity and you want to sell your interest, say for instance you're ready to get out, you want to sell your interest or sell your partnership shares, the gain or loss that you would be calculating on that sale, it's changed from how it originally was. So originally that gain would be allocated to your home state, but now what Illinois is saying is they're saying that gain or loss would actually be allocated based on your Illinois apportionment over an average period of about 3 years. So let's quickly go into an example just to kind of give you an idea of how this would work. So say, for instance, I have an S corporation, 2 owners. One owner lives in Illinois, business is in Illinois, everything is really in Illinois, but I had one partner who lives in Florida, around COVID time, decided I can get all my work done in Florida than I can get done in Illinois. I'm going to move down to Florida. And now that owner decided, well, I think it's time for me to retire and realize there's another person up and coming who probably might want to take over my shares. So when that Florida resident goes to sell his shares, he actually has to allocate all of that gain from the sale of his shares to Illinois because that's where all of their activity is. That's where their apportionment is. So this change is actually effective as of the date of this, the bill that was put into service by Pritzker. So that was effective on June 16th. So I would say if you are thinking of selling your shares and you're an owner of a pass-through entity, this is something that you really want to take a look at, and I would recommend reaching out to your Porty Brown advisor. So next, I'm going to talk through a couple of changes that happen on the C Corp side. So the first change that kind of happened on the C Corp side is related to combined groups with multi-state activity.
So, Rachel, quick question. Sorry to interrupt. What's a combined group?
Oh, that's a great question. So a combined group is really when you have a couple of different C corporations, and because of their ownership structure, they're over a certain threshold, we actually have to take those C corporations and not file separate returns for everyone, but we have to combine it all into one tax return. So mainly that's like the ownership, or if you have integrated dependent on each other, that's when we have to combine those. So the shift that happens with these combined is how we actually apportion our Illinois sales. And really it affects those where in that combined group, you have some entities where they already had Nexus in Illinois, they already had that filing requirement in Illinois, and another entity that might not have had Nexus or that filing requirement in Illinois. So let's talk through kind of an example of how this would apply. So say, for instance, I have 3 C corporations. 2 of them, they had Nexus in Illinois. I'd be taking their sales and kind of figuring out what portion of their income should be allocated. And then I had one that used to never have Nexus, doesn't really have a filing requirement on a standalone basis. Now they have to look at their Illinois sales and include it in that numerator factor. So let's say, for instance, that one that now I have to include, if they weren't part of this combined group, we wouldn't even be filing in Illinois. So really this, in this situation, causes us to have to file or apportion more income to Illinois and basically pay more tax in the state of Illinois. And this would be effective for tax years ending on or after 12/31 of 2025. So it's effective for this year. So that is a huge shift for these combined groups.
And if I'm a not C corporation, this doesn't impact me, right?
Yeah, this we're really referring to those C corporations. Great question, Ashley. So let's go ahead and jump into the third change that I wanted to talk about in detail. Is this, it actually really impacts C corporations that have foreign subsidiaries and those foreign subsidiaries have GILTI. Now you might ask, what is GILTI? So GILTI stands for Global Intangible Low Tax Income. And I'm going to talk really high level on GILTI because I know this is not an international call where we're talking about all the details of that goes into the different international items. But very, very high level, GILTI is similar to an AMT tax. You might have heard that term before, also known as alternative minimum tax, where the goal is really to ensure that the company is not trying to shift their profits to a lower tax country. So they want to so the IRS is kind of making sure that they're paying their fair share of tax. So that's what GILTI is. So now let's go back to how does this apply to my Illinois companies? So originally, when I was a C corporation and I had foreign subsidiaries, I had GILTI. I got to take, when I was looking at my Illinois return, I got to take 100% subtraction for that GILTI income, and so I didn't have to pay tax on that GILTI income. Now I only get a 50% subtraction. So I'm going to have to pay tax on some of that GILTI income. So if you do have a C Corp with foreign subsidiaries and GILTI, this is going to be an increase in your income in the state of Illinois as well. And this one is also effective for tax years ending on or after 12/31 of 2025. So it's going to be happening right now in this tax year. Before we jump into credits, I did want to briefly mention that there are a couple other income tax changes, and just wanted to mention that if you have a C Corp with foreign related entities, there are some different changes. So if that does apply to you, please go ahead, reach out to us, reach out to your Party Brown tax advisor, and we'd be happy to talk through those additional changes a little bit more. Okay, so with that, I'm going to shift from income tax law changes to now tax credits. So the first one that I wanted to talk about was this Advancing Innovative Manufacturing Credit, also known as AIM. This is a new credit that Illinois came out with, and it's a pretty nice one. It's really there to kind of attract that capital investment and spur innovation and also create jobs, which is great in the state of Illinois. We love that. What this is really doing is if you want to have if you want to do capital improvements, so this could be purchasing, renovating, rehabbing, and you want to do improvements of over 10 million, you could get this credit. And there, it is a tiered credit. It's ranging from that 3% to 5%, depending on how much those capital improvements are. And most manufacturers that operate in Illinois that this would apply to. So some good common sectors that this would apply to is automotive manufacturing, aerospace, energy and life science, machine manufacturing, robotics, chemical manufacturing, fabricated metal manufacturing, all of those items or all of those categories it would apply to. Some things you want to make sure you keep in your mind is if you have other major Illinois credits like the REV credit or the EDGE credit, you can't take this credit as well. This will be effective beginning 1/1 of 2026, and there are some very, very key dates to look out for. So if you're thinking of doing some capital improvements over this threshold, I would really strongly advise you reach out to your Porty Brown advisor, come talk to us, and we can kind of help give a little bit more of that information. This is also a non-refundable credit, so just so you know, but you can carry it over to about 10 years or so.
So Rachel, you said that this is effective starting in 2026. Does that mean I have to have my building done and completed in 26? Do I have to just start it in 26? What does that 26 start really mean?
Great. It's effective for 2026, but really you have like a 5-year capital improvement window. So you don't have, it's not that you have to get it up and done by 26. That might be a little tricky with trying to do that type of improvement. That would be very impressive, but no, you have like a window of time to get that done. Okay. The next two credits that I wanted to touch base on, these are not new. These have been around, and I'm just going to kind of briefly mention some of the items that have expanded for these credits. First one is that REV Act, which stands for Reimagining Energy and Vehicles. So this was originally came out to kind of bolster the Illinois manufacturing in this clean job economy. And really this was originally for electric vehicles and battery manufacturing. And now it's expanded to green steel production, aircraft components, electric propulsion systems, and other clean tech manufacturing categories. So that's kind of nice because it's kind of getting into some additional space. And also it increased the credit renewals and increased the credit for retained employees. So if this is something where you're now in that space, I would recommend kind of reaching out to your Porty Brown tax advisor. And then the one other item that I wanted to mention on the renewable energy is that definition was updated. It does now include nuclear energy as well. So with all of that, we've already talked through the income tax changes. We talked through the tax credit changes. I'm going to go ahead and shift it on over to Ashley, and I'm going to let her talk about the indirect and sales tax changes.
Great. Thank you, Rachel. So kind of introducing us here into that sales tax, and we're also including indirect taxes here. So these are taxes that we'd be subject to that don't fall into that sales tax bucket or the income tax bucket, but are indirectly impacting taxpayers. I do want to highlight that Illinois is a state that updates their sales tax rates typically 2 times a year, either on January 1st or July 1st. And so a lot of changes have happened that were impactful starting as of 1/1/25. So you might have seen some of those changes impacting you and your business. An example of such is the implementation of sales tax on leases of tangible personal property. It was also called the rental tax in a lot of media. And so you might have seen a lot of articles come out about that rental tax. If you have more questions on that specific tax, please reach out to us or throw a question in the chat. That's going to be not exactly what we're covering here. We did put an article out about it. So again, check out our resources and you can get more information there. The goal of the changes that I'll be covering here is going to be a little bit more focused on the law that was written, that Pritzker put into effect around that same, what was it, June 16th, I believe, that Rachel had mentioned for the effective date of some of those other changes she was describing. And so we're going to just dive right in. These first few taxes maybe aren't as impactful for you, but they are going to be large revenue generators for the state. So we did want to cover them. And maybe this is something you as an individual are interested in. If you're so that first tax, sports wagering tax, this is a flat per bet tax. And so what this means is that sports books have to now pay 25 cents per wager on the first 20 million wagers. And then it goes up to 50 cents per wager after that. It doesn't matter the volume or the amount of that specific bet. It could be a $1 bet or it could be a $100,000 bet. And so you might see some impact here because that's going to now be impacting the sports books, and so that could increase the fees associated with that. So just wanted to call that out. This should be a pretty big revenue driver for the state here. There's if you're a sports fan, you know, especially with football season getting kicked off here, a lot of people very interested in sports wagering. So that could be something impacting you in the near future here. For the telecom tax changes, so we just wanted to highlight here that these changes are a increase in that tax rate. So it's going up by 1.65%. It was at 7%, so now it's at 8.65%. Again, if you're impacted by the telecom tax, you're going to see this increase on the invoices or bills that you're receiving. And so we wanted to highlight that one as well. So both of these changes and the hotel tax change I'm about to dive into a little bit more in depth were effective as of 7/1. And so that 7/1 tax, that 7/1 change, that July 1st change I mentioned, that's when these went into effect. The hotel tax now, this one's a little bit interesting. And so we're going to probably spend the most time here on this slide because what this change is that it expanded the hotel operator's occupation tax to include short-term rentals.
Hey,
and
Ashley,
so, yeah, Rach.
can you tell me what qualifies as a short-term rental?
Yes, great question. So a short-term rental is anything typically 30 days or less. And so that's hey, I'm getting away for a weekend. I'm going to go find an Airbnb on a lake. I'm going to find a Verbo, and I'm just going to go there for a few days, rent out somebody's home or rent out a specific location and pay through usually those providers that I mentioned, Airbnb, Verbo. There's a lot of other ones out there, but those are kind of the biggest ones in that market space. So that is a short-term rental. It's going to be less than 30 days, and it's not what you would consider normal lodging, such as apartment rentals for a year or so, where you're kind of locked into a lease. So this is kind of targeting more of those weekend excursion type rentals. And so the big change here is that now that those short-term rentals are included in this hotel occupancy, the hotel operator's occupation tax, they are now responsible for going to be charging, collecting, and remitting that tax back to the state of Illinois. And the tax rate here is kind of interesting. It's a 6% tax on 94% of the gross receipts. And so you might see this if you go stay at normal hotels and things of that nature. But now that it's affecting those short-term rentals, like I said, those Airbnbs, there's a little bit more from the administrative standpoint here that we need to maybe dive into. And so we do have a lot of clients who end up using Airbnb to rent out maybe their second home or maybe rent out their main home if they're going to be away for a few months. And so that's why we wanted to address it here, because there is some changes with this. Another change that's happening is they're kind of relabeling these facilitators, these hosting platforms, as re-renters. And so any platform that facilitates these types of bookings are now considered re-renters, and they're going to be required to register with Illinois, file the forms, collect the taxes and the fees. What this means is if you are somebody who uses one of these sites, effective January 6th of 2026, those facilitators, those re-renters, are going to be responsible for collecting, remitting, and filing on behalf of those items, which means that there wouldn't necessarily be anything additional you as an individual or you as a renter would need to do if you're utilizing one of these platforms. If you're not utilizing one of these platforms and doing it all on your own, there could be additional reporting and filing requirements. So if this is your situation, reach out to us, reach out to your tax advisor, and make sure you're aware of some of the implications of this law change and how it could impact you in your specific situation. The next type of sales tax we're going to talk about real quick is the serviceman occupation and use tax changes that are coming into play starting January 1st of 2026. So this one isn't effective yet. We've got a little bit of time to take a look at it, but we do want to call it out. I'll first highlight that Illinois is unique in their sales tax structure. We've got two main avenues of tax for sales tax purposes. There's the retailer's occupation tax. That's your normal sales tax. That's I'm going to Target, I'm checking out and buying things, I'm paying a sales tax. That's retailer's occupation tax that you're paying. Separately, there's this serviceman occupation tax, and this is affecting service industries. An example being car repair, HVAC, things of that nature, where sometimes you get goods, but the larger part of what you're purchasing is a service. And so there's specific rules associated with servicemen. The change that's happening here is impactful for out-of-state service providers with Nexus in Illinois. An example being you have a Wisconsin-based car repair service that sometimes goes into the state of Illinois to perform the services that they perform, and then they go back to their home state of Wisconsin. That's kind of their home base, right? So they're coming into Illinois, they're performing the services in Illinois, and so it would be technically, to Illinois' eyes, that's an Illinois sale that has transpired. Previously, those providers were only responsible to do the 6.25% state rate. Starting January 1st of 2026, they're now going to be required to also collect the local tax rate. So Illinois across the board has a flat state rate of 6.25% for their high, so that's your general merchandise, and a 1% for the low items, such as food to be consumed off premises and certain medications and things that fit into that medical supplies bucket. And so the huge shift here is, number one, it's going to cause more reporting to be required on these remote sellers and service providers, because they're going to need to know the local taxes associated with the work that they're performing. 6.25, easy to apply across the board. If I'm doing a job in Woodridge, Illinois, and then I go and do a job in Elk Grove Village, Illinois, I've got two different tax rates that I need to be aware of and that I need to be charging. And so there could be a lot more complexity associated with this. So if this is your situation, make sure you're aware of the location that you're providing the services, as well as what those local tax rates include. Because your local tax is going to be a city, a county, you could have a business district, and that all stacks on top of the state 6.25% to get you the effective rate of what you're paying. In a lot of the surrounding area to our offices, that's anywhere from 7.5% up to 10 to 11%. If you're downtown Chicago, it's going to be high. So knowing the location that you're doing the work is really important for determining what that local rate is going to be. There's also a really great tool on the Illinois website, Illinois My Tax website. There's a tax rate finder, and you can use a specific address to tell you exactly what that rate is going to be. And you can pick a different date as well. So say you're looking in December because you're trying to plan out your January work, you should be able to select a different date to know exactly what tax rate will be in effect as of that date at that specific location based on the address that you provide there. So important to know, pretty big change, and so we wanted to highlight that here. A few other changes. The first one also deals a little bit more with remote retailers rather than specific Illinois-based companies. But as I mentioned, we do have a lot of Wisconsin and Indiana client base, and so we want to make sure that we're covering this, not just for Illinois-based going outside of the state, but other states coming into Illinois. So the first change here is the remote retailer Nexus threshold is being simplified. And so what does this mean? So I don't know if you all remember, there was a lot of hubbub a few years ago with something called the Wayfair case. And the Wayfair court case went all the way up to the Supreme Court. Back in 2018, it was decided. And it was brought through the state of South Dakota. And they basically said, you might not have physical presence here. And we'll talk about Nexus a little bit later. And you might not have physical presence, but you know what? You've got enough sales and you've got enough activity here that we say you need to do something to help us sustain our state. So you have to charge sales tax because now you've got enough of a presence here. The thresholds that they took to that Supreme Court case were $100,000 in sales or 200 or more separate transactions. Pretty much every single state that instituted a sales tax jumped right on board, because what state's going to turn down money? And they passed the very similar law. $100,000 or 200 transactions. Illinois was one of those states. Their law went into effect in 2019. But what's the change is, starting in 2026, the shift is going to eliminate the transaction threshold and purely be dollars based. So it's just a gross receipts threshold, $100,000, and that is assessed on a rolling quarterly basis. So it is important, if you are not based in Illinois, to know that, so that you can be looking at your records, seeing what your sales into Illinois are in that prior 12-month period on a rolling quarterly basis. I also want to point out that all the states can have different rules about what their look back period is to determine that threshold base. So it is important, if you are seeing yourself reaching these like $100,000 thresholds in other states, get some research completed so you have the best information possible to make good decisions about what you need to be doing as a business to stay compliant in these other states. So that's the remote retailer Nexus threshold simplified. And again, we're removing that transaction threshold and focusing purely on a sales-based threshold, and that's $100,000 of gross receipts. The next item I'm going to talk about here is some sales tax sourcing and documentation penalty changes. So this one actually is impactful as of now. It went into effect with the signing of the bill on June 16th. And the change here is that there is now going to be a 15% gross receipts tax that's replacing traditional penalties if a seller or facilitator, so marketplace facilitator, fails to provide documentation proving the location of delivery or possession of the items that they're selling under an audit. What does this mean? If you're under an audit from the state of Illinois and they say, hey, you should have charged sales tax on this, and you say, no, it went out of state, if you don't have sufficient documentation to prove that it went out of state, such as a bill of lading or the invoice showing that shipped to address is appropriate, then they're going to just assess that 15% tax on everything rather than breaking out, here's my tax, here's the penalties and interest on that tax. It's just going to be a flat 15% on all of those unsubstantiated amounts that you're not able to prove or provide sufficient documentation under audit of the location of where those items were being sent. So
that seems pretty high, Ashley. 15%.
Yeah, could be pretty significant. I mentioned before, a lot of the area around me here is about 8.5% sales tax. This is nearly double that. And so depending on where you live, there could be pretty steep implications here if you don't have good documentation. So this is your PSA. Always have good documentation for your sales tax filings. It's super important to have. And if you are an out-of-state provider kind of coming into the state, it's still just as important to have good documentation. I will note that it is, because this is a gross receipts tax and not considered a penalty by the state, it is tax deductible. So if unfortunately you get caught in this situation, the full amount would be deductible for tax purposes rather than being a non-deductible expense as a penalty like it would have been in the past. But 15% isn't anything to sneeze at. So important to have good record keeping and documentation there. The last item is the grocery tax transition. So you might have seen some really exciting articles and media publications about the repeal of the grocery tax in the state of Illinois. I want to highlight here that that is the 1% state rate that I mentioned earlier, but that does not eliminate the local municipality taxes on those items, on the food items. So the grocery tax is often, it's kind of called that in total, but basically what happens right now is Illinois imposes at the state level a 1% sales and use tax on groceries intended for off-premises consumption.
Ashley, can you go into really what do you mean by off-site consumption?
Yes, great question. So if you go to the grocery store now, maybe you look at your receipts, maybe you don't. Please do the next time. Make sure you're, number one, only buying things that you actually bought. But take a look at that tax. If you look down below at that bottom tax line on your receipt, you'll often see that depending on what you purchase, there might be two different tax rates because Illinois considers food in a lower tax bracket. So I kind of mentioned this a little bit before. We got that high rate with the state 6.25%, and then the low rate, the 1% for Illinois for food and specific medication and medical related items. There are certain items that are food that don't fit into that low rate bucket because they're considered unhealthy. Examples being alcoholic beverages, soft drinks and candy, the ready to eat meals, so hot food. So kind of contrast this with if you go to a restaurant, you're consuming food on premises, it's prepared for you, it's hot. That food is taxed at that higher tax rate of the location that you're in. Compared to if you went to a grocery store and bought all the ingredients in that meal and then went home and cooked it yourself, you would be doing the low rate on that food items. And so this is the big change that's coming, is that 1% rate on the food is being repealed as of 1/1/26. So this is coming in the near future here. But what's interesting about this one is it's a state tax that revenue was always given to the municipalities. And so now municipalities might have a budget shortfall. And so in order to combat that, the state said, you know what? We know we're taking away your funding. If you want to institute a local tax to replace this 1% that we're taking away, you can do so. Now, if you're anybody, a business, municipality, regardless of what you are, and somebody says, we're taking away revenue that you need to function, and you have the option to reinstitute it, chances are that that's what's going to happen. They're not going to want to shift their budgets around. They're going to more likely than not want to put that back into place. And so while the state is repealing it, the localities still have the option to reinstitute it, and they don't need to take it to a vote. Some municipalities have put it to a vote, but they're not required to do so. And they actually have until October 1st, so just about a week from now, to let the state of Illinois know that they are going to be instituting a local tax to replace this 1% phase out for the effective for the 1/1/2026 period. If they don't do it for 1/1/26, that doesn't mean they can't do it in the future as well. That could still be incorporated into those 7/1/11 changes in the upcoming future. So all that to say, you probably won't see that big of a difference on your grocery tax bill. Many municipalities have already enacted the tax. Again, it's replacing the revenue that they got anyway. So you might have seen a lot of media about, hey, the grocery tax is going away. And I caution with, it is, but it's coming back in a different fashion. So always something to be aware of when we see positive tax changes for taxpayers, or so they are portrayed to be. So wanted to highlight that out here. So a lot of fun things happening here with some sales tax changes. The last one I'll quickly mention is that if you're a special entity, so an example would be hospitals, nursing homes, those food items are now going to be exempt from sales tax starting January 1st of 2026 as well. So there is still a little bit of a carve out there for those specified industries as well. But I'm sure you guys are sick of sales tax and me talking by this point in time. So I'm going to turn it back over to Rachel, who's going to give us a little bit of highlights on the upcoming amnesty program.
Okay. Thanks, Ashley. So we've already talked about income tax changes, credits, and also some sales tax and indirect taxes. So we're going to bring it home with the amnesty programs, and then that's going to end our changes that we had according to the bill that Pritzker signed back in June. Then we're going to briefly talk about Nexus. So Illinois did come out with a couple of amnesty programs. They come out with 3 in particular. I'll start with the first one. Ashley will talk about the next 2. So you might be wondering, what is an amnesty program? What are we talking about? So basically, it's the state coming out and giving you the opportunity to come forward, pay late taxes, pay the tax, get those interest and penalties waived, and also not try and seek any civil or criminal prosecution. You know, as long as you pay the taxes and file the forms in the amount of time window that they give you. So the first one that we have here is this general amnesty program that they have. This is for all types of tax that are due to the Illinois Department of Revenue. So this applies to individuals and businesses for the period ending after June 30th of 2018, as you can see on the screen, and before July 1st of 2024. So you do have a small window of time to where you can file these and pay those taxes, because you still have to pay the tax, you just get the interest and the penalties waived. So that's starting next week on October 1st. That's when you can start filing and paying, and that runs all the way through November 17th. So just to reiterate, these are taxes paid to the Illinois Department of Revenue, so it's not going to include like your property tax or your motor fuel tax. It's just the ones that are paid to the actual revenue. There are a couple of things regarding the penalties and interests. There's some that are not going to be waived, like your lien filing and lien release, and there's a couple other fees that wouldn't necessarily be waived. But if you have any questions, go ahead, reach out to us, and we can help with that. So with that, I'm going to pass it over to Ashley to talk about our next 2 amnesty programs.
Thanks, Rachel. So the next type of amnesty program that's coming out is covering that same window that the general amnesty program is covering. So this is a franchise tax amnesty program, and it's going to be covering franchise taxes and license fees that would have been due from July 1st of 2019 through June 30th of 2025. So a slightly different window. And it also, if you'll see the dates here, October 1st through November 15th. November 15th falls on a Saturday, and so that effectively is ending November 17th, which is the Monday, the business day. The law indicates the 15th, and it also indicates the 17th because of the Saturday date here. But what is franchise tax? So this is the taxes typically that you're paying to the Illinois Secretary of State. If you have an annual report that is due, those are the types of fees and licenses that are going to be able to be covered during this amnesty program. So Rachel mentioned one that was all facilitated by the Illinois Department of Revenue. This one's facilitated by the Illinois Secretary of State. So if you're who's eligible for these programs, this program is eligible for domestic, so Illinois-based and registered corporations, any foreign corporations that are authorized to transact business in Illinois. Maybe you got a few years back on your filing of your annual report. This is an opportunity for you to get caught up without those penalties and fees. And then the last type of eligible corporation would be foreign corporations that have been transacting business without authority. And so this is the one I want to highlight here is if you are an out-of-state business owner and your business has started to do activity in Illinois and you have not registered with the Illinois Secretary of State to get the authority to transact business, this is a fantastic opportunity for you to get right, get situated, get all caught up on your filings so that you have that authority to stand on in the future if something were to happen and you needed to be registered in order to transact business. I will say that if you are a corporation currently involved in pending litigation or investigation with the Department of Business Services, you would not be eligible for this program. But if this is something that is interesting to you or you might think that you would qualify for, I would recommend reaching out to one of us, reaching out to your tax advisor. This is facilitated, as I mentioned, by the Illinois Secretary of State, and they did put out a great FAQ about kind of more the compliance side on how do you apply for this program. And so that would be a great resource for you to utilize as well if you have more questions on this specific program. And the last type of amnesty program, Illinois was really busy, guys, this summer with their law updates. The last type of program here is the remote retailer amnesty. So this one, we're looking ahead a little bit because this isn't effective until August 1st and it's through October 31st of 2026. So we're looking almost a year out now. But this is going to cover uncollected taxes on sales of property that would be subject to sales tax for remote retailers from January 1st of 2021 through June 30th of 2026. And
hey,
so
Ashley,
yeah.
Could you go into what is a remote retailer?
Yep, I definitely can. So great question. So a remote retailer is somebody who has no presence in the state of Illinois, and they only are required to charge, collect, and remit tax based on those thresholds we talked about earlier. So that $100,000 in gross receipts. So if your home base is in California, say, but you ship more than $100,000 of product, of taxable product to end users located in Illinois, you're a remote retailer and would be required to register, charge, collect, and remit the sales tax to the Illinois Department of Revenue. And so this is a great upcoming program for a lot of businesses who maybe weren't quite sure of what the requirements were, but want to do things correctly moving forward. This would be your opportunity to do so. By doing these type of programs, you're also helping start that statute of limitations where the state can then look back and say, oh, you're registering now? Let me take a look at those last 5 years and see if maybe we think you should have registered 5 years ago rather than right now. If you're getting caught up, you're coming forward yourself, you have a lot more protection from those types of things happening. Doesn't mean it can't happen, but it usually helps. They're not going to bite the hand that feeds them and is coming forward willingly to get some opportunities here. I mentioned before some of the issues with local rates for out-of-state people because it can be kind of overwhelming to determine what type of tax or what tax rate to charge if you're shipping to a lot of different locations. So the nice thing about this program is that it is going to give simplified tax rates. So if you are selling items that are typically subject to that higher 6.25% state rate plus the local rates, there's going to be a flat 9% tax on those items. And if you're selling things that are subject usually to that reduced rate, this is again mostly medical equipment, prescriptions, things of that nature, food would fit into this bucket as well. You're going to be at a 1.75% tax rate rather than whatever the localities would be. So there would be no interest or penalties on these eligible taxes. So really just a great opportunity for remote retailers who need to get right, need to get situated to take advantage of this opportunity and get everything squared away so that moving forward, you've already done what you needed to get caught up and file appropriately. So, okay. This one's also going to be administered by the Illinois Department of Revenue. And as we get closer to it, they are going to be publishing more specific information about it. They don't want to get confusion created with the current amnesty program that's effective starting next week. So you'll see more publications to come out about that in the coming months here. Okay, so those were our amnesty program updates. Next, let's jump into something that everybody loves, this word, Nexus. You might be wondering, what is Nexus? I've heard this word, I think it maybe applies to me, or I heard this word and I don't think it applies to me because I don't really know what it means. And so I'm just going to pretend it doesn't apply to me. It could apply to you because Nexus, in the context of state and local tax, refers to a minimum connection between that business and the state that requires the business to either to comply with the state's laws, and most of the time involves a filing requirement. And so there are a lot of implications here. We've talked about many types of things today. The highest kind of larger overarching concepts here, income tax side, sales tax side. You could have Nexus for income tax. You could have Nexus for sales tax. You could have Nexus for both. And so it's really important when you're looking at operating in a different state. This is Illinois businesses going outside of Illinois or non-Illinois based businesses coming into the state of Illinois. Really important to know what your potential exposure is and what your potential requirements are to be operating in these other states. And so, we're going to talk really quickly on different types of Nexus. So these are things that'll help you trigger in your mind, I might need to do something about this because I have this situation happening in my business. So there's some specific factors that establish Nexus. And unfortunately, every state is different, but these are some good baseline things to keep in mind as you're operating in these other states. The first being physical presence. This is, do you have a location? Do you have an employee? Remote employees can be considered physical presence. So that's a huge one impacting clients and businesses in this post-COVID era. Do you have a storefront? Do you have a warehouse? Is your inventory stored somewhere in an Amazon warehouse, but you still own that inventory? That's physical presence, and it could be triggering some of these requirements for you and your business. So important to be aware of. And another one is economic presence. So this is when maybe I don't have physical presence in a state, but my volume and activities are significant enough that I'm getting an economic benefit from that state, and therefore that's going to be enough to trigger me Nexus. We talked about that for Illinois purposes. That's the 100,000 in gross receipts. Majority of states have that same threshold. So that's a good kind of idea to say, okay, am I getting over 100,000 in any state? I might take a look at that further. So important to know for that. And then also potentially affiliate relationships. Are you partnered with other businesses in other states that could have an impact as well? So this is an extremely high level overview of what Nexus is, but we did want to point it out while we're talking about these other topics because it does have some significant impacts, not only for Illinois businesses, but for out-of-state businesses coming into Illinois as well.
And this is also a key area where it's something that Porty Brown could help you with if you are interested to determine, do I have Nexus in a specific state? That is a service that we do offer for our clients or even non-clients on a consulting basis to do Nexus studies.
Great. Well, I mentioned we had a lot of things to cover. We do have a couple minutes here to jump into some of the Q&As that we've received. I do want to point out as well, I meant to point this out earlier, that if you send any Q&As, even if you're watching this as a recording, those are going to come through to Rachel and I. And so we will be able to address any questions that come through. If we don't have time in the session today, we will be reaching out to you independently to answer the questions that you have. So please keep that in mind as well. But Rachel, I see one that came in and it's a little bit more focused on federal. So it was, how does Illinois agree or disagree with the federal law changes of the One Big Beautiful Bill Act?
So that's a great question, and that's, I feel like, top of mind to everybody right now. So really, a lot of the states have not necessarily come out and said what they are going to do after the One Big Beautiful Bill came out. But there is one thing that not everybody realizes that they're on the states is some states do what we call conformity, where they'll do a rolling conformity or a static conformity. And what that really means is the states that are a rolling conformity state, they're a state that says, I agree with the federal with any changes that they come out with, unless I have already said, no, I don't agree with this one. And then there's other states that are more of a static conformity, and they state where basically I'm going to come out and say if I agree as of X date. So Illinois is actually a state that is a rolling conformity state. So they are, at this point in time, since nothing else has come out really, they are agreeing with a lot of those changes for the One Big Beautiful Bill, unless they came out and said previously that they didn't. Like, one example would be bonus depreciation. They originally have decoupled from bonus depreciation for a number of years. So of course they still wouldn't agree with that. But for instance, the changes with the R&D, they were agreeing with the Fed. So those changes at this point, Illinois would agree with it. So great question.
Thank you. I do see another question here, kind of on that same topic, but if Porty Brown is going to be doing a webcast on the federal income tax changes associated with the One Big Beautiful Bill. And I do want to point out that we did put on a webinar about that a little bit earlier this summer. So you can find that in our resources on our website, and you can watch a recording of that webinar to kind of get you caught up on those federal changes as well. So I do want to be cognizant of our time here. So unfortunately, we don't have a ton of time to get through the rest of the slides. We've got a couple more here. So if you reached out on a question, we will be addressing your questions and sending those answers to you in the near future here. But I want to kind of move us on to next steps. Rachel, what do we do next after hearing all of this information?
Great question. So what we'll be doing is we will be sending out a follow-up email to everybody who attended the webinar, everybody who signed up, and included in that email will be a link to a Nexus checkup. So I would recommend, if you're a business owner, go ahead, complete it. This will help you think through different areas and see kind of, do I have exposure in certain states? You know, if you're a Porty Brown client, feel free, reach out to your Porty Brown representative. Talk to them about the changes that we've talked through, not just on the Nexus side, but on all the other state law changes, and especially the ones that you feel like would be applicable to you. And then, you know, also if you're not a client and you're interested in the Nexus study, I mentioned it before, but we can definitely do a standalone Nexus consulting engagement as well. So in closing.
Well, thank you everybody so much for your time this afternoon. We appreciate your attendance. Rachel and my information is up right now, so feel free to reach out to us and contact us with the questions that you have. As Rachel mentioned, Porty Brown does offer some Nexus engagements if that's a concern for you at this point in time, or if you're a current Porty Brown client, we can definitely do some more specific state and local tax research for your specific situation. Other than that, thank you all and have a great rest of your day.
Thank you.